currency war between China and the U.S. However, China has promised the yuan a renminbi, or whatever you want to call it. The world would see for itself that the move is very much in direction to increase the role of market forces in determining the RMB's exchange. The world market just came out on a Black Monday rout, and accumulating anxiety there. In fact, the global financial recovery is still weak, no doubt about that, and uneven. The U.S. and Europe are already on the road to recovery. The growing momentum is far from strong, no doubt. Meanwhile, volatile conditions in the Mideast and Korean Peninsula, the South Korea and the Democratic People's Republic of Korea, DPRK, were on the brink of war last week. In neighboring Japan, the government declining a meaningful apology for wartime atrocities. That was 70 years ago. In the Philippines, asked the U.S. to provide military assistance in resupplying and routing Manila's forces in the South China Seas. And despite these thorny issues, the other dominated headline, China and U.S. are working closer on almost every global issue. So this is U.S.-China. We'll go now to the Reuters news agency to fill in some things with commentary and with recent facts here. Let me just kind of back up a little bit here and grab a couple of headlines we were looking at earlier here. This is a Fed says rate hike next month hinges on market volatility. Now, it's always interesting to note in macroeconomic policy that the markets play in to it somewhat. And this is the reason what we use reporting mechanisms here. This is Stanley Fischer. He speaks during a televised interview at the Fed Bank of Kansas City's annual meeting at Jackson Hole. That was on the 28th. There, Dr. Fischer, who used to be in charge of the Israeli central bank, he's vice chair, said recent volatility, in the global markets could quickly ease and possibly pave the way for the U.S. Rate hike, which investors and government central bank around the world are bracing for, with a key policy meeting set for the September 16th through 7th. Fed spoke publicly what amount to jockeying for position, whether increasing the Fed benchmark rate, that's the overnight rate, was too risky, and the economic slowdown in China, as we were just talking about that. It's easy to tell. Fisher, that's CNBC, and the sidelines of the annual banking conference in Jackson Hole. We normally cover this. Some reason it slipped by us, so now we're doing a little bit on it. Acknowledge the global equities sell-off again last week would influence the timing of the rate. There, concerns about China's economy have whipsawed the market, including Wall Street. There, the market index has ended largely unchanged, capping a week that included both the market's worst day in 4 years and the biggest gain. This is where the seesaw model comes in since the depression of 2007-2009. I think they could settle quickly. That is from Dr. Fisher. The St. Louis Bank president, Bullard, told Reuters he still favors a hike next month. He added that his colleagues would be hesitant to do so if global markets continue to be volatile in mid-September. The Fed's policy committee does not like to move right in the middle of a global financial storm. Well, these storms, that's one thing to note. They come and they go. The week started badly for the markets in Asia, and then on to Europe, and finally to the U.S. Mentioned here is the revised 3.7% amortized pace in Q2 there. And after he spoke, traders added to the bet the rate hike would come this year. Well, it's possible it would come in later in Q4. Overnight index swaps rate implying a 35% chance for the Fed would move in September, 77% in December. We feel it's more likely they will move in December, but December capping Q4, one thing to remember, and going into Q1. Now, Q1 is would be the winter of 2016, a presidential election year. Usually a volatile time at best, depending obviously on where the winter is. There will not be a dock strike this winter, so the ports of Los Angeles, Seattle, Oakland will not be closed. The Atlanta president, Lockhart, is so-called centrist, who has become less resolved about a September rate hike as market tumble, told to Bloomberg it was reasonable to see the odds of a move next month as roughly even in where it's 50-50 there. And various conservative groups are wanting a rate hike, whereas more progressive groups say that it should happen in 2016. The president of the Minneapolis Fed, Karita Kalakara, they call him a dove, stands pat on a rate hike in Q2 of 2016, said in the interview there. So there are different, obviously, opinions on where this should go. I agree if they're going to do anything, it should be in 2016. The economies are just too weak at this particular time to venture in that particular sphere. And, well, that's the end of Reuters. Let's go now to the Bloomberg, and then we'll cap this off with BBC and do the numbers. Much of the volatility, incidentally, in the energy markets is caused by speculation. Petrol prices up, petrol prices down, and honestly, there is not a reason for that. Period. We'll jump over here to old Bloomberg Business very quickly and cap that. I like to get several sources always, seeing where we are going here. Basically the same thing. Here, Canada, China pale as risk to U.S. growth. A currency drop as inflation is right. These are some opinion pieces here. Donald Trump would like to raise his own taxes. Donald Trump's a very interesting person. Won't go into too much here. We'll cover Mr. Trump on our political program, Boston Red, where we can more than do that. But their headline is Fletcher keeps liftoff option open as October comes in force. This was at Jackson Hole. The NBC interview, I think it's easy to tell the change in circumstances which has begun in China's devaluation is relatively new, and we are still watching how it unfolds. Basically the same thing they said in the Argentine piece that I read from the Chinese news service. I wouldn't want to go ahead and decide right now what the case is, more compelling or less compelling, for a September liftoff. Dudley talked about turmoil. He is the New York Fed. The markets make a case for September move. Less compelling to me than a few weeks ago. Standard & Poor's 500 index is around 4.5% higher since Dudley spoke. The central banks held rates near zero. There are two camps there. Fisher's remarks placed him between the two camps on the Open Market Committee. Bullard of St. Louis and Loretta Master of Cleveland said the economy cumulative gains have been strong, but they expect them to continue and put varying weight on recent market movements. In my view, so far, in looking at all the factors that the economy can sustain an increase. That is Master. She's interviewed again by Bloomberg. At Nuberkamp is signaling there is little reason to rush and prefer to hold off. And that's because yuan and the Chinese slowing economy. We already talked about this. Wait and see, folks. Got a little over 2 weeks, and we have to make a decision. We'll have time to wait and see incoming data. Very important there. Investors are seeing a 38% chance the Fed will move in September, and a 49% possibility in the October meeting. And basically, that is where it is. Equities around the world have been whipsawed this week, indicating the market remains subject to the shifts. That's shifts. Excuse me. Standard & Poor's Index 500 closed 1/10% higher after the U.S. benchmark's biggest two-day gain. You put much into that since the beginning of the bull market in 2009. The 10-year Treasury yield was 2.18. Little change there. One of the reasons we go to different sources, so we were able to get the Treasuries to see exactly where they were in terms of those rates. Let's go now to the BBC and start winding down here and catch some of the world market news here, and things are not as easy as they used to be since they have obviously changed their format. We prefer the older indexes where you could actually find the business news all sort of pushed together, and what has basically happened here is a little bit different. They tended to be more newspaper alike, which is not the best setup for what we actually do. And now we'll finally get to it. All of these news outlets have constantly been changing how they cover the news, and we finally get there. This Ashley Madison, and for people who've been following it, was a website that catered to people that obviously were into extramarital type relationships. The founder and chief executive there stepped down, Noel Bitterman. Anyway, so much for that. Shanghai shares end. We're more interested in here. Ended 8% down. Almost 8% lower as the market recovers. What goes up comes down. Friday, the main benchmark, Shanghai Composite, closed up 4.8% at 3,232 points. China's second, the Shenzhen Composite, closed up 5.4% there, but ended the week 9.4% lower. Other markets rebound. The benchmark Nikkei closed up 3%, and the Hang Seng in Hong Kong gained close to close down 1%. Hang Seng ended the week 3.6% lower. This consecutive week fall there. And from Andrew Walker, he covers the market in China for BBC. Market has rebounded, shows some signs of relief all around. Some argue typical August market flip, and calm was almost always going to return. In fact, it did return two figures.